What's up, everybody? This is Caesar with Chatham Mortgage Partners, talking to you guys today about recent news. A lot of people have been thinking that rates actually dropped, mortgage rates, and guess what? They didn't drop. In fact, they got worse. The impact wasn't on mortgage rates. So let's go over some of the basics on this. So there's confusion. We know that the Fed rate cut actually was what really got impacted by like a quarter. Change does impact all sorts of interest rates, including mortgages, but mortgages we're talking about more HELOCs. A drop in the Fed policy rate does result in lower mortgage rates, so it can have an impact, but in this case it didn't. In fact, like I said, it had the opposite effect. Things got worse on, pretty much like student loans, personal loans, things like that are what really got impacted. Huge difference is one of the things that impacts this type of rate, the Fed rate, is short-term transactions, loans for 1 day or less. All right, and the biggest change for everything comes down to frequency of movement. We know that the Fed meets 8 times a year to make that change and see what's impacting the economy, how the economy is doing, so that way they can make those changes. So that's what they meet. They meet 8 times a year for that. But mortgage rates actually fluctuate once or more times per day. And when it comes down to the bond market, it can be thousands of times per day. So it's completely different. In this recent case, rates we're seeing highly likely probably a week ago. This was already impacted into rates probably a week ago, so it didn't really have an impact in this week. So this was probably taking effect maybe a week or 2 weeks ago because it was already foreseen. And it really comes down to what's really happening in the marketplace. It really comes down to how's the economy really doing. So that's where it really comes down to most people and most economists is like, okay, if the Fed is doing it, there's got to be a reason, right? But all in all, as far as mortgage rates, we're still in all-time lows, and we're still in a great place for people to purchase, negotiate a lot better with, they have more purchase power. And I think, rates have, for people that want to refinance, it's a great time to refinance, especially if you have, if you have an ARM and you want to go back to a fix, this is a great time to take advantage of it. Or if you want to, make another investment and increase your net worth, like I always said. And check out my other video. My other video talks about, what it really comes down to and the impacts. But thank you so much.